Hey guys, this is Justin from nextbigtrade.com. Welcome back to the channel. In this video, I want to discuss some recent price action in stocks and in gold and talk about how failed moves, either breakouts or breakdowns, can lead to sharp moves in the opposite direction. So back in 2018, one of the key indicators for me that stocks could be in trouble was the fact that when the XLF ETF tried to break out of a very tight consolidation back in late September, October 2018. It tried to break out and then it failed, right at the 30-week moving average. And then a couple of weeks later, we got this big volume signal that a lot of dumping was going on in stocks. And at the same time, we saw this negative divergence against the S&P 500 for the financials for a number of months. All these things put together were a sign that the market could be in trouble, because financials tend to outperform the market when the market is strong and underperform when the market's weak. And that's exactly what we saw here. We saw a big bear market in stocks in late 2018. In 2019, I actually put out a video in the summer about how we were ready for new highs. And one of the things that I was looking at was the fact that the financials put in a bullish engulfing candle when they tried to retest the 30-week moving average back in the May-June time frame, and actually did the same thing again in August. And that actually set up this consolidation, which ultimately led to a breakout and a move to new highs in stocks. Now, what we're seeing right now is a negative divergence where the financials are underperforming the S&P 500 once again. And notably, what we've seen over the last 4 or 5 weeks is a tight consolidation in XLF. It tried to break out to new highs last week, but at the end of, or 2 weeks ago, but at the end of last week, put in a big red candle. And actually, this is starting to look like a failed breakout, which could finally lead to an overdue correction in stocks that I've been talking about on Twitter and in a recent video. Now, moving to the Russell 2000 ETF, this is another good ETF that can kind of give warning signs to what can happen in stocks. The same thing kind of happened in 2018 with this ETF, along with XLF, where it started to diverge negatively against the S&P 500, and then it gave some big high volume dumping signals here, and then again, like we saw this big crash in stocks. Now, we're not seeing the high volume dumping at all, but we're seeing a negative divergence once again with the S&P 500, and we're seeing a potential failed breakout here. So again, I don't think stocks are really headed for a bear market, but they're probably set up for a correction here, and we're probably going to move back down towards the 30-week moving average. And ultimately, we'll have to see what happens there. If stocks were to break support at this level right here and continue to fall, then that would be a sign that stocks were really in trouble. But if they hold support, then it's nothing more than a pullback, and we'll see this continued move higher in stocks. Now, turning to gold. Now, gold is giving an interesting signal here, where back in, obviously in June 2019 is where the big breakout in gold happened, and we saw this huge volume increase, and gold broke out into a stage 2 uptrend back then. One of the signals that is kind of happening, the same thing that happened in June 2019 is happening now, is you've got a positive divergence with stocks where gold has been outperforming stocks for a few weeks now, and you've got this tight handle consolidation in this kind of cup and handle pattern, where as soon as this tight consolidation happened, the next couple of weeks, gold broke out on a huge volume. We're seeing the same thing here, this tight consolidation. And what happened recently here was, you had the overnight stuff with Iran going on, where gold spiked higher, but then it corrected severely. And instead of breaking down, it just kind of held this level, which is pretty bullish. Gold, if gold was in trouble, it would have just broken down from here and continued lower, and maybe started a new downtrend. But instead, what it did was it just pulled back and consolidated in this tight range. And we're seeing, again, this positive divergence with stocks, where it's actually outperforming stocks over the last 3 or 4 weeks. But what we're really missing is just the big volume increase that signals the move into stage 2 and a blast off signal that gold is going to move higher rapidly. And I think that could be coming very soon here. And now turning to silver, silver tends to be a laggard compared to gold and play catch up in a big way after gold breaks out. And we saw that happen back in 2019, where silver didn't even flash the positive divergence signal until after gold broke out, and then it started to play catch up. It broke out in a big way and blasted off higher for multiple weeks. One of the key signals that the metals were in trouble, though, was flashed by silver when silver moved lower on huge volume in early September, and this signaled a shift from metals to stocks, where stocks outperformed metals for about 5 months. And you can see how the volume just slowly tapered away. And this shows that there's like little buying pressure and interest in the metals while stocks were doing really well. But we actually are showing a positive divergence again here against stocks over the last few weeks. And we're showing that consolidation, like tight handle formation again here too, where, silver's right at resistance and could easily break out higher and move into a stage 2 continuation breakout, just like gold. So again, with the metals, we're just waiting for this blast off above resistance on volume. And once that happens, the mining stocks should continue on with the metals. And we're already seeing some mining stocks have broken out above resistance, but some are also lagging. So you really want to focus on the stocks that are showing relative strength and that are about to break out above resistance. So I hope you enjoyed this video. Definitely check out my website, nextbigtrade.com, and hit that subscribe button if you haven't subscribed to my videos yet.